Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 10, 2022. Hope you're all doing well. In today's segment, we'll take a look at the importance of stock screening. In this volatile market, you got to have a great stock screening software. One of my favorite is TradingView. TradingView is you can start free with this software. You don't need to pay, but if you like it, you can get a subscription, and you can do a lot more things with the subscription. So with that, let's take a look at TradingView software and see how I scan the stocks and buy the great stocks, or even sell some premium using options techniques. Let's deep dive here. Normally, I like to go into the stock screening software and I start my day with the list here. They got a nice watch list here. I click on the watch list to see what's going on in the market. And I will also bring up my chart, so that way I can look at the chart also in the same time. So I go here to the products and get the chart, click on chart plus, as you can see here. Now I got my chart as well as my watch list right here. So once I do that, I might get rid of the stock screener to begin with and start with a clean chart. So look, now I got here my index. So it tells me how the market did yesterday. Look, I got here Dow Jones Industrial Average here. I can adjust it a little bit to make it a little bit better here. Look, I got Dow Jones Industrial Average. I got a one-day view here, which is pretty good here. I can go with the daily view. So look, it's down big time, as you can see here. I'll click on 1 year. So look, we got a yearly chart of Dow Jones Industrial Average. By looking at this, I get a good idea how the indices did yesterday. Look, Dow Jones Industrial Average. Oh, it's been coming down off late. Look, we got a downtrending market in Dow Jones Industrial Average, and it tried to go higher, came down big time, knocked down yesterday, as you can see here. So I could look at Nasdaq here, which is NDX, and I can do the same thing. It brings up the chart here, same story. It's trending in the same direction here. And S&P 500, mother of all indices, same story here. Look, it's trending down, as you can see here. Then you got dollar here. Dollar is gaining strength. Look at the dollar strength here. As dollar is gaining strength here, all these multinational companies, they have a foreign exchange problem, evidenced by stocks like Salesforce.com. They talked about their challenge with the foreign exchange. The moment you bring your money back to United States, you're gonna hit the unfavorable exchange rates. That's why it's not great for especially big multinational companies. And then you could look at VIX, which is a fear gauge, as many of you know here. Look, VIX is trying to go higher, as you can see here. Many folks in this market, they kind of buy a triple X ETF on the bull side or bear side. Yesterday, a lot of people bought triple X bull ETF on QQQ, TQQQ. That kind of makes money. I see a lot of traders doing that off late. So that gives you a good idea of how the market did yesterday. And then I would go down here into my list here. I would look at the futures. So as you see here, I got the futures here. I got S&P 500 futures. I can click on it, and look, it's slightly up, as you can see here, up slightly, not too much here. But see, look, it also did not great, and looks like we have a slight uptick today, evidenced by, look here, change 0.25, not too much, almost flat, I would say. And same story, I could look at Dow Jones Industrial Average. As you see here, down 70 here, and 0.22%. Same story. Market is not yet convinced to go higher yet because of a lot of negative news. And look at the tech heavy Nasdaq right here. Nasdaq is also up slightly. Nasdaq got battered yesterday. It's trying to go high slightly, as you can see here. And you got crude oil. Crude oil is also starting to go higher. Look, crude oil is in a bull pattern here. I've been selling some put options when it came down. It's a good trade to do. So with that, this gives me a good idea of how the stock market is doing. Next thing I would do is I would just go here and open up my stock screener. In the meantime, if you're wondering how to get the dark view here, you could just go into your trading, into your indicators, Right here on the top here, you could go here and click on the profile here. Actually, you can go to profile settings, and you could go to the profile right here, and you could change your mode here to the dark mode. Look, right here, also right here, look, we got right here dark theme here. I set the dark theme on, that's why it's all dark. If you like the white theme, you could just click on the white here, just move it up here, and you'll get the white mode here. I like the dark mode, so I will keep it at dark mode here and go from there. All right, now let's jump in here. Let's go back here and look at some great stocks here. Looks like it's a little bit still sluggish. Let's bring it. Okay, good. So let's go into the stock screener here. One thing I like about this screener here is it's very versatile. You can basically manage it to your needs and change it to your needs very easily. And as you can see here, very clean view, very simple view. That's one of the reasons I like this scanner. So I can collapse that watch list here and go into my scanner here, stock screener, and it gives you a default stock screener. Right now I selected my filter list here, view 2. If you want to change the layout here, you can just click on right here, the 3 columns right here, and you could select what you want to see. Look, I already selected few things. I don't want a lot of things. I unselected them. One of the beauty about this trading view is they have about 300 400 attributes that you can choose from. It's a whole host of information, and one of the best thing I like about this software, once you get into one of the premium subscription, you could download this entire list here. I can click on this and download the list into my desktop here. Look, I got here list of stocks here, about 2083 here. I can open up them in Excel spreadsheet. Look, I got my Excel spreadsheet loading up here, and I could look at them. I could filter them and do all these things here. That's one of the reason I like this software. They're very generous with the stock list here. You get a whole host of stocks here you could download from, and you could filter them and sort them, whatnot. In this segment though, let's look at the filters here. From a filter perspective, all the stock traders need to understand how they want to trade in this market. So what I do is I go back here to the filters. In this volatile market, I want to be a little bit careful with my filter settings. Right from the top here, I would look, what I have done is I have selected few things here. I like to look at common stocks, and I want to look at ADRs. These are some foreign stocks, and some REITs and UITs. And right now in this screener, I am not interested in things like ETFs here. I would leave it at that here. And from a volume perspective, you could drag this one here. I like to just type it in here. I can say 1M for 1 million. So let's do that right here. In the meantime, there you go, 1M. Look, I got here my minimum volume 1 million, and in this market right now I'm looking for opportunities to sell some premium or sell some put options. That's why I like to have stocks at least more than $30. When I sell put options, I would go with 30 here. And then look, it's trying to narrow down, as you can see here. So in the meantime, I would go here and look at the market cap. Normally I like to look at the market cap when I'm selling put options. Typically over 1 billion or so. I could do the same thing here, go into market cap here, just type in 1 billion. All right, so it will adjust to 1 billion here. I will say more than 1 billion. All right, so we got our 1 billion here, and it goes all the way to more than 2 trillion, as you can see here. And volume is very important. I will do the same thing here. I will say I want volume above 1 million here, so that way I get a little more stable liquid stocks here. All right, I got my volume here, and then I can keep going here into other areas. RSI perspective, there's a relative volume and all these details here. I would not look at those right now, and I can now go into technicals here. From a technical perspective, typically I like to look at RSI, or relative strength index, and I want relative strength index to be below 50, so that way I look at stocks that are beaten down here. All right, so it's adjusting for that, and in the meantime I would go here and look at a few more criterias. And normally in this market I like to look at the free cash flow here. I want free cash flow positive companies. I can go here to look at free cash flow. All right, we got price to free cash flow here, and I would say I want let's see here, do we have just free cash flow? All right, price to free cash flow, I will say above 0 here, so that way we get some good price to free cash flow candidates here. So with that I would go here and just go with these names here. Look, I got some great stocks here. These are all positive, these are all positive free cash flow companies, and RSI less than 50, that tells you these stocks are sold off here. So once I have my list here, I would look at some of these names here. If I'm these days I'm interested in selling some premiums here or put options, I might look at some high valuation candidates here, or high volatility candidates. So I could go here, and just scan through this little bit and look at high volatility candidates. All right, so here I keep going here, and look, I got my all this data that I look at here: volume, net margin. Many of these are net margin positive companies here, and keep going here. We got a lot of great data here: weekly performance, gross margin, and so on and so forth. And as you see here, I got volatility right here. Look at the volatility percentage. I could scan this list and sort this list and look at highly volatile stocks at the top here. All right, so it's doing its magic here. Let's give it a minute and look at the high volatility. Let's click once again. Looks like it's sorted in a reverse order. All right, now we got high volatility stock at the top here. It's the same list that we looked at, and let's look at these names here. Look, top of the list we got AMPH, then we got Novax, Zen, so on and so forth. So I would look at some great companies and try to sell some put option here. So as you see here, we got $30 stock here, which is the AMPH, and then you got few more Upstart, ABM, and so on and so forth. And in this market here, I like few stocks very well that I'm very much comfortable with. For example, Meta Platforms, as you see here, its stock came down yesterday. Right now it's 184. As you look through here, they got a little bit higher volatility also. So now, once I get my list here, I will go to my Thinkorswim platform from TD Ameritrade. So I go right here to TD Ameritrade here. I would bring up Facebook or Meta here. Look, first I'll go to a chart here in Thinkorswim and go into a one-day chart. I just go here and a daily chart comes up right here. So I could bring up Meta or Facebook. All right, so we got Meta right here. So look, Meta right now IV percentile is 36. I'm not very much interested in the IV percentile 36. I would not take this trade here and go back to the chart here. So what I could also do here is, once I have this here, I could also just add one more here. I could go to my I could go here to my indicator list here. I would add an indicator here. So look here, I got my indicators. What I want to add here is implied volatility percentile. So I just say implied volatility. All right, I got one right here, implied volatility percentage. I've got IV percentile and HVP, so that way I get a good idea upfront itself how is the volatility versus going back to Thinkorswim platform all the time. Look, I got my implied volatility here. Now I can go back to Meta and look at how is the implied volatility. Look here in Meta, it's showing a little bit high implied volatility. But when I go to Thinkorswim platform, it tells me, hey, implied volatility percentile is 36, so I could weed that out. I'd rather go with the Thinkorswim implied volatility, which is always more accurate. And as we scan through here, we got a few more here. We got Zoom Info, DoorDash. DoorDash is a positive cash flow company here. Market does not like it. I like DoorDash here. Look here also, this platform is telling me implied volatility is going higher, as you can see here. And then we can go to Thinkorswim platform here and look at DoorDash. All right. Look, DoorDash is pretty okay here. Implied volatility percentile is 54 here. Look, I'm comfortable with this implied volatility percentile. And also as you scan through here, implied volatility right here about 50 percentile here is trying to go higher slowly here. And check-in money flow is flowing into the stock. That's a good sign here. And I'm pretty much comfortable here. I could just go here and sell some put option. And look, DoorDash right now stock is at $68. Look at this, it's beaten down big time here. And look, 52-week below is 57, almost close to $10 below the current price here. I'm pretty comfortable here. When I'm selling put options, I typically like to go maybe 35 or 40 days out. I can look at 49 days. This also works for me. It's a weekly one. Typically, many times weekly has got less volume, so I could look at weekly here. Looks like market's a pre-market time right now. Things are a little bit does not show too much details. I would probably go to monthly option here. There you'll see more volume. Look here, monthly you'll see more volume. But if I go back to the quarterly here, 49 days, the volume you see is zero. There's not too much open interest here. I would rather go to 35 days out here, a monthly expiration cycle. When you sell put option, don't go too far out. Stick to 35 to 45 days out or so. Look, I got my put option scanner here, and look, right now stock price, as you can see here, is $68. I could sell put option right here at say either around 40, 45 is good enough here. I want to make some good money. I don't want to take too much risk. As you scan through here with the 45 here, look, we got here 45, and keep watching the probability of touch here at $45. Yes, the probability of stock reaching $45 is 24%. So I'm pretty much comfortable with that. I could sell some put option right here. And as you scan through the call side, sometimes I love to sell strangles here with the DoorDash here. As you go to the put side of the house here, keep watching probability of touch here. We got probability of touch right here around 16%. You get some good money here, or I would like to go even a little bit lower here. Look, probability of touch is right here, and you could go at 11% here. You get around 59 cents. That's a good enough money here. You could sell something like this. But if you're not comfortable, sometimes you don't know how the market is going, you could just sell one side here. But if you're comfortable here, I would recommend selling strangle. Otherwise, start with a put option. That's always a little more safer strategy. You could just sell a put here and collect $80, as you can see here. You could even go 84. In this market, I always get filled at the mid price here. You could look at the mid price and just sell mid price here at 84, and boom, you could just confirm and send. It's a good way. But if you want to take on a little more risk, like I normally do, you could go here and sell a strangle. So I would go here, sell a strangle on DoorDash here, right here, and look on the put side 45. Probability of touch is around 24%. On the call side, you can go all the way here, like we talked about earlier. You could go to 11% probability of touch, and look, it's around $100 here. That's it's let's see here, probably yeah, $100. Current stock price is 68. I will sell the call all the way at the top here at $100 and go from there. Look all the way down here. All right, so what I'm saying here is between now and 15th of July, as you can see here, I want the stock to be between $45 and $100. With that, I'm selling this strangle. Selling strangle is nothing but you're selling a call option way above the current stock price and selling a put option way below the stock price. You want the stock to be between those two prices here. You want DoorDash to stay between 45 and 100. Then you'll make money. And if you want to look at how a quick analyze tab here, Thinkorswim gives you a nice analyze tab. You can analyze this trade. I would go here and go to analyze trade here. Look, we got our analyze trade here on this stock here. Looks like we got multiple things going on here. Let's go here and look at the risk profile and go here and look at set slices here to break even, and we can put our date right here. All right, so what's going on here is we are buying a strangle. That's not what we want to do. That we can go here to sell a strangle here. Let me go here and do it -1 here. There you go. We are selling a strangle here. For selling this strangle here, we are collecting $1.46, and then we can go back to our analyze tab here. All right, look, we got our analyze tab here, and we could remove this strangle and just have this strangle that we are selling right now. And we could analyze this trade here, set slices to break even, and 7/16, which is our expiration date. So we got our expiration date here. We got our strangle right here. As long as the price stays between $100 and $45, we will make money here. And let's see here, we got metrics, PL open. All right, so in this year you want to make sure stock stays between these two price here. That's when you make money. And we can go back to our trade tab here, and we could confirm and send this here and collect nice $1.46 premium and go from there. So we could go back to our scanner here, look at few more stocks. Look, we got Okta. Okta is a good company. Stock has been dropping off late. I love selling put options on Datadog, which is a good analytics company. Let's look at Datadog here. Look, Datadog, as you look through here, looks like volatility is increasing, as you see here. And we can go back to our Thinkorswim platform and bring up Datadog. All right, let's go to chart here and bring up Datadog. Look, Datadog right now RS IV percentile is 59. So I like it when IV percentile is high. And look, we got implied volatility right here. The blue line here, it's around 59% or so. It's trying to tick up, as you can see here. So I'm pretty much comfortable with this one here. I've been doing put options selling on Datadog for a long time. Look, I can go here, do the same thing here, go 35 days out here, and look, Datadog is at 103 right now. You could go all the way down here. I'm comfortable with the Datadog. So look at the probability of touch here. I say I would go even 75 is a good one. You get some nice premium. But if you want to stay comfortable here, sell a put option at $70 here. Look, currently it's at 103 here. You could very comfortably sell a put options at 70, which is probability of touching 70 is just 20%, as you can see right here. I'm pretty much comfortable here. I will sell a put option just at this price here. All right, so I'm collecting 93 cents here, and just to spice it up, go back here, just to spice it up a little bit. We can even go on the call side and try to sell a strangle here. So look, if you want to sell a strangle, keep watching here. We can go probability of touch, keep watching probability of touch. Around say 9% is good enough. We don't want to be taking too much risk here. So I could delete this and sell a strangle instead here. So let's go back here. We talked about 70 strike price here. Now we'll sell strangle. All right, so we are selling a strangle here. So 70 is the put here. On the call side, we'll go all the way up here. Keep watching the probability of a touch. I want to go around, say 9% is pretty comfortable here, which is $145. If I want to make sure stock stays in that range here. Let's go all the way here to 145. That's a very big jump from the current price here. Look what I'm doing here. Currently, stock price for DDOG is 103, and I'm selling a put option way below at $70 strike price here. Probability of stock touching $70 by expiration of 15th of July, which is 35 days out, is low 20%. At the same time, I'm selling a call option way above the current stock price at 145. Probability of stock touching that is just 9%. I'm pretty comfortable here. I'm collecting $1.63, which is $163. If the stock stays between these two price range here, I collect this premium, I make some money. If it does not stay, I can adjust this, I can roll this. I got a lot of options here, and if I like this stock here, I don't mind buying the stock at $70. If it goes higher, if it jumps up over 145, by 35 days, I have other strategies I can implement and take care of that situation. So with that, I'm pretty much comfortable. I could confirm and send this here. Let's see if this analyze trade tab gives us any indications here. Let's analyze this trade here. Look, we got analyze trade here, and we could do same thing here. We could just go here and look at set slices to break even 716. And look here, we got as long as stock stays between 145, which is all the way down here. You can't see. Let's bring it, it's all the way down there. So as long as stock stays between these two ranges here, 145 and $70, you would make some good money here. So this is how I would start using the platform, which is the trading view here, to look at the stocks and see how they're doing. Look at the IV percentile, and then take those high IV stocks and go back to Thinkorswim platform and sell some put options. If you're a beginner, if you're a little more savvy, you could sell strangles like I'm doing here, and as the market is volatile, you could make some money. I do the same technique on the ETFs. These days I do it on ETFs like QQQ, which is one of my favorite, and other favorite is SMH, semiconductors. Many folks are afraid of semiconductor stocks because these single stocks can go up and down here. But look at SMH here. Look at that IV percentile. I love selling strangles and put options when the IV percentile is high. So that way in this volatile market, you can make some good money. Look, SMH, I got it right here. Right now, SMH is at 232 here. And look, all-time high is 318. And if you're afraid of trading stocks like AMD, NVIDIA, you could be more safe with SMH here, and you could sell strangle in SMH. 232 right now. You could do same technology methodology here. Go all the way down here. You could sell a put at 182 here. Probability of touching this price is just 16%. You could do a strangle, sell a strangle, just like how we did earlier, and go from there. Look, we got a sell and strangle right here, and we're selling at 182, which is way below current price. And you could go on the call side and look at probability of touch, which is around 9%. I'm pretty comfortable. Or I could even go to 13%. 13% puts us at $270, which is way above the current price. So I could say 270, which is 13%, and go from that 270 all the way down. All right, so now what we are saying is, look, current stock price is at 232 and we are selling this strangle, and we are selling a put option way below the current stock price at 182. We are selling a call option way above the current stock price, about 270. We made sure probability of touch is very low, and it's a ETF. There is no single stock risk, so we could comfortably make $190 as long as the ETF stays between 270 and 182. There is a very high probability, and you could confirm and send and make some good money. And if it stays within that price by 15th of July, this whole strangle will expire. You get to keep your premium, which is $190. So with that, thank you very much. Happy investing and trading. Please subscribe.